Fellow investors, it's time to talk about our favorite stock again, MSTY. So I came across this post on Reddit, and the title of it is Disruptor MSTY of YieldMax. And I have to go over this with you guys and read this to you because it's just an amazing write-up. So here's the original post. Disruptive ideas often simmer quietly for a year or two. It's been about a little over a year for MSTY. When they finally catch fire, the critics pile on. Usually those who can't grasp the shift. That's when the real debate ignites. We have definitely seen that with MSTY, haven't we? Bitcoin was a punchline in 2009, called a scam even in 2017. Today, nations are building strategic Bitcoin reserves. Amazon faced similar skepticism. In the 90s, bookstore giants like Borders scoffed at an online shop with no physical stores. Those who backed Bezos' vision reaped massive rewards. Tesla. Automakers laughed off electric cars as a passing trend, doubting a tech startup could compete. Now Tesla's rewriting the rules of mobility and energy. Airbnb. Hotels and regulators mock the idea of renting out spare rooms. Early adopters who embraced the sharing economy built fortunes. It's all true. MSTY fits this mold. When something seems too good, it's often a game changer. Netflix spawned Hulu and Disney Plus. Uber led to Lyft and robo-taxis. Bitcoin paved the way for Ethereum, Solana, and more. Amazon birthed Shopify and Wayfair. Tesla sparked Rivian and Lucid. Airbnb inspired VRBO and beyond. YieldMax is already drawing rivals like Roundhill, Defiance, and Bitwise. There's a lot of money to be made in this, not just for investors, but for these fund managers. We're in the it's a scam phase now. Boy, I've heard that way too much. I'm getting scammed all the way to the bank, by the way. But history rewards those who bet on early disruptors. Once NAV stability data proves itself, sentiment will shift. These funds could hit $100 with $3 to $5 monthly payouts. Well, we've already seen that. We've already had, what was it, $4.40 something. Do I predict a $5 payout at some point? Well, if the NAV is triple digits, oh yeah, we're going to see that. I think we're going to see it anyway. Is it going to hit 100? I don't know, because when it plateaus, when the underlying MSTR plateaus and Bitcoin plateaus, kind of like what it's doing now, like bouncing back and forth in that 80K range for a while, I believe, the NAV will come down because, one, the spikes up are going to be capped at least somewhat. The volatility is going to give those, huge distributions, and those distributions are going to come out of the NAV. So I don't know that it's going to get that high. Do I foresee a $40, $50, maybe even $60 MSTY? Oh yeah. I can see that in the future. I don't know when that's going to happen, but I definitely can see that happening. Late investors will still gain, but early adopters with a low cost basis could see 6-figure monthly returns. Bottom line, MSTY and YieldMax are shaking things up. If you trust your investment, block out the noise, stay focused, and don't get shaken out by doom and gloomers who are pissed they bought at the top. This guy gets it. He gets it. And I got to give credit. Kano8, this is a Reddit post. The original commenter is Kano8. What an excellent, just a great take. Comparing it to, early adopters and Amazon. And I could even remember, kind of dating myself here, but going back, to the 80s where Apple was a joke. Like, why would you invest in this home computer company? Like, everything gets, any of these disruptive technologies or, innovations, they always get mocked. They always do, by the people that are very, very traditional and very, very conservative. They just always get mocked. So like, yeah, I've seen it myself. All right, I'm going to go down into the comments. Let's read some comments and get some reactions here. I have 28K in MSTY. Just do realistic calculations. If MSTY continues to pay 6 to 7% a month for another 33 payouts, so that's 33, well, it's not exactly every month, because there's some months you're going to have double because it's every 4 weeks. And I reinvest all of it. Reinvesting all of it. Okay. I should have about 6,000 shares. They will have net cost me about $4.66 a share. Those shares are in a tax-free account. If they are paying out $125 times 13 a year in June 2027, that's a low number. 125, I'm certain you can average over that. I think the mean is going to be higher than 125, but we'll see. That is about 97,000 USD. He must be Canadian, or 130,000 Canadian per year. I think I can live on that alone. Yeah, and don't try to live on this alone. Please diversify, guys. Go into other things. I'm pretty heavy into this myself, honestly. But yeah, you want to have you don't want all your eggs in one basket, and you want to go into other, either single company stocks, crypto. You want to go into, I have some in indexes too, but I invest pretty aggressively. MSTY for me is not a Hail Mary, but an experiment. Will it play out this way? Who knows, but it sure is fun. Best luck to all. Yeah, and people enjoy investing. It should be enjoyable. You should enjoy investing. And obviously these people are passionate about it. They love investing like this, and they don't have to sell anything. They don't have to worry about timing the market. They just buy more shares. They buy the dip, they drip, whatever they got to do, and they just see it's true compounding. It is true compounding, and it's so fun to see it happen. It could be life-changing. I agree with this post premise. I do not have the time of day, nor the liquid capital, nor the expertise to run a covered call strategy like MSTY or any other similar yield max product. Right. So when MicroStrategy goes up in price, if let's say Bitcoin moonshots and it goes to 200K fairly rapidly, so many investors aren't going to have the capital to buy 100 shares. They're just not going to have it, whether they want to do it or not. And then to try and set strike prices for something that's so volatile and bouncing up and down, if you're not confident in your options trading ability, you're probably not going to want to do that. You're probably not going to want to mess with it. Like, leave it to the professionals. Let them do it for a fee. That's fine. I think a lot of people and a lot of investors are going that route, and they agree with them. I am outsourcing my options to YieldMax. Yes. I am subcontracting my side business income generation. Yeah, so I talked about that too. I kind of liken this to being a small business owner. You put in the capital. It doesn't make a profit right away. You have to wait. Just like if you start a business. You put that capital in, eventually it cash flows, and that's what we're hoping for. I checked some of my funds the other day, and over half of them have already cash flowed. Like, it doesn't take that long, even if you factor in taxes. It doesn't take that long for you to get your return on investment. I am happy to pay what I consider to be a trivial management fee. I agree. I think it's pretty trivial. And so many investors, they point to that and they say, guys, you're paying almost 1%. Be happy to pay 1%. I mean, please, we are making that back easily. Like, say we put that money into Coca-Cola or SCHD, you aren't beating that. You aren't beating that total return. Forget it. You could take the 1% out. You aren't beating that total return, guys. Don't even kid yourselves. Not happening. I'm also hedging my bets by doing the same with Roundhill, just in case, diversifying. This all works to fuel my investments in normal ETFs that are well diversified. I have been an investor for 30 years and have never seen a product like YieldMax ETFs for bringing high options income to the masses. This is a game changer indeed. One thing I have certainly learned is that you have to run these funds like a depreciating business asset, such as a delivery truck or a machine in your factory. Yes, they require ongoing maintenance and repair. Yeah, I agree. It's not exactly set it and forget it. You have to monitor things and possibly swing trade. You could do puts. You could protect yourself. There's many things you could do. If you're worried about taxes, you could put it in an IRA. You could use the distributions to either buy more or buy something that you consider more stable, safer, however you want to put it. So you have to add at least some money to them on a regular basis. Lump sum purchases made only once are not the best way to utilize these powerful financial tools. Regular contributions and buying ex-dividend days are the secret sauce. Yes. Ex-dividend days, and they aren't necessarily the lowest point, but in many cases they are. But you could always watch for dips in the market. If the underlying dips, this is also going to dip. So that's your cue to buy more. However, I realize I'm getting exponentially more out of these funds over time that I am actually contributing. I agree with you. The whole weekly thing is new too. I'm all in on them because I'm genuinely interested in how this is all going to play out. How long will they continue to kill it? I think it's a good idea to go into, other products like Roundhill, Curve, Rex Shares. There's so many out there. And then there's the major brokerages also. Like Schwab, that have their own funds. I think it's good to kind of mix things up. And I understand a lot of us, we like those single stock options funds. That's what I like. And I like to buy, and make my own basket with the single stock. And unfortunately, there's not a lot of them out there. There's not a lot of competitors, and even if there are, there's only a few, and some of them overlap. So there's not a lot, but there are more coming out. There's not a lot of options now, but there's more coming out. And I predict in the next 3 years, we are going to see a ton of these open up. I think we're going to have two, three, maybe even 4 MicroStrategy options trading funds. We're going to have some for Tesla, Google, Meta. We're going to have several to choose from. And they're all going to play the options differently. And that's really going to help us. Competition is great. That's what we want to see. Good take, but covered calls are really not a unique idea. It's been around for a while and you could do it on your own. Well, yeah, covered calls they've been around a while, but not with MicroStrategy, with a huge Bitcoin reserve. That hasn't been along very long. So kind of a moot point. I don't get it. Usually being done by individual trader to capitalize on your own shares that has been popularized lately, but making it into an ETF. Yeah. I'm a big fan of MSTY and other covered call ETFs, but this is not a disruptor. Well, it's not a disruptor in the case of, say NVIDIA or Tesla. That's, I don't think it's a disruptor in that sense. Someone called it a game changer. That's kind of what I'd call it. is a game changer. Barrier to entry disruption. No need for 100 shares of MSTR. MSTY democratizes access. Yes, it lets everybody get in. I mean, you could get in with $20 pretty easily. Letting investors gain exposure to covered call strategies on MSTR with just a single share of the ETF, making it accessible to retail investors with smaller portfolios. Yeah, so now if someone, and that's kind of the point that the guy above him missed, is what if you have a small portfolio, you haven't saved a whole lot or invested a whole lot in your life, and you got $10,000? Well, you could get in on options trading on MicroStrategy. You're not going to be able to do that with $10,000. So come on. Well, maybe you could, but that's all you would have. You wouldn't be diversified at all. This way you could diversify. So yeah, people are missing that. They're missing that point. And the bottom line is this with something like MicroStrategy is you get paid with volatility. And that's what these critics are missing. Like, you get paid with volatility. It's not capital gains. Capital gains is part of it. And I'm sorry, but SCHD will never pay you in volatility. They pay you in earnings. It's different. Apples and oranges. Apples and oranges. And that's why you're never going to get the total returns that you can get with MSTY with SCHD, because SCHD doesn't pay you in volatility. It just operates differently, and that's how people are really killing it with this fund. And there's several funds out there that are doing really well, several of these options trading funds. But I believe in being very selective, though. Study the underlying, buy the underlying also. I think those two things are very important. No options trading experience needed. Yes, writing calls yourself demands a solid grasp of options mechanics, strike prices, expirations, volatility. You could do like simple weekly expirations. I don't think that's that big of a deal. There may be some weeks you have to be careful over earnings, especially if you're a newbie. Like, be careful of earnings, track earnings, and like write that stuff down on your calendar. Make sure you know when earnings are coming, because that's where, as a newbie, you could really get hurt and hit hard. It's intimidating for most. MSTY removes that barrier. Investors get the benefits of a sophisticated option strategy without needing to learn the ropes or navigate a brokerage's options platform. No need to monitor markets constantly. Yeah, like I said, you don't have to worry about it. Let's say you want to take a vacation for 3 months, leave the country. Well, you don't have to track all that. You don't have to keep tabs on the market and when the next earnings report is, and technical analysis on the underlying stock. You don't have to worry about that. It's all taken care of. Anyway, this was a great write-up, really good insight, and excellent feedback. Keep buying the dip, guys.